Hey Andy, how's your Thursday?
Hey Scott, how's it going? Well, I'm hanging in there. Thanks everybody for coming in today. Yeah, my partner Jamie, he's flying around chasing down a cat. You guys can tease him about that later. But anyway, thanks guys. As you can probably tell by my voice, I am kind of battling a cold, but hey, that's not going to stop me from trying to put on the best show I can. And I got some good stuff today. I think you guys will like it. So uh, let's get started. All right, before we do, let's always go over our disclaimer, make our lawyers happy. Guys, this webinar is for educational purposes only. Thank you, Waleed. I appreciate it. Uh, it's for educational purposes. I'm going to be talking about some nice setups in here. We're going to be looking at a new alert today, which helping you find stocks on the fast line. Guys, if you hear me put it on mute, it's probably because I got a sneeze coming up. So just bear with me. We'll get through this. But anyway, guys, nothing that I say today should be construed as investment advice. If that's what you're looking for, please look for a stockbroker, a registered advisor, somebody who can act in that capacity. All right. We do have some new people in here today, kicking the tires for the first time. I just want to remind you about our incredible support, education, and training here at Trade Ideas. We do have a very powerful software, and it can be daunting at times, but you're going to find out in a short period of time it's very intuitive, and boy, it just takes a week or two, and you'll have it down. And we offer an array of webinars throughout the week, Monday through Thursday in the same time slot. We have a webinar. It's usually myself, Steve, or Jamie pairing up and doing those webinars, but on Wednesday we do throw Dan Merkin and Brad Williams at you. And let's not forget the traders room. Okay, guys, we got about 500 plus good traders in there. It's moderated by Barry. He does a really good job. He's a good trader and a great trader actually. And you get to see the software on top of all that. So, guys, there's plenty of opportunity to learn this, and I plead with you to please take that opportunity to do so. And then Friday support sessions is getting bigger each week. This is for a place to come in. It's a straight up Q&A session scheduled for 3 hours, and we will uh, let you ask the questions and we'll answer and demonstrate anything we need to show you with the software. It's a great place to be. That's tomorrow at 11 a.m. Eastern Time. All right, we do have training and education resources on top of all that. We call it our TI University. It's beginners 101 and it goes through advanced 401. They start at 12 Eastern on Monday and they run each day, Tuesday, Wednesday, and Thursday. So these are about an hour and a half long. It's about an hour long curriculum, and then we open it up for Q&A at the end of each one of these. So this is available for anybody at any time as long as you're a subscriber. Just sign up. You do have to register for these, so make sure you do so. All right. Excuse me just one second here. Brokerage Plus, guys. In case you haven't heard, we do have a module we call Brokerage Plus, and what this allows people to do is if you have strategies, you can hook those strategies up to IB right now through our module Brokerage Plus, and it's a way for you to auto trade, or some people may want to call it gray boxing if you want to control that. I'm going to talk about that later in my in our segment here. But if you want more information about this, guys, it's out of beta now. You do have to pay extra for it. All right, but it's worth it, and you want to look for trade-ideas.com/beta. All right, let's look at our agenda for today, guys. We have the market recap, and then we're going to take a look at some of the Holly trades in the Holly recap. And you've heard Steve talk about fast line. Steve and I, when we were with Today Trader, this was a key component of our trading. We was always watching that 10-period moving average. Well, what I've done, I've taken a little time today to construct a top list for you guys to find those trades, that are hugging that fast line and are up on the day. So I'm sure everybody kind of gets excited usually when I have a new top list or something I'm working on to share with it, and I have one of those today. So hang in there, and this will come, after it'll be our third topic of the day. And then I put together a little Word document. I want to talk about different types of trading when it comes to discretionary and auto trading, and then what we call gray boxing or gray box. And I'll leave that open for when that time comes. But that's going to be, I'm going to go over the pros and cons of each. So I think you guys will enjoy that as well. All right, for right now, let's back out and let's talk about the market recap here. All right, let's put it on the spiders here. And this is what we have, guys. This is starting to look pretty interesting, from a bullish standpoint. I was skeptical. I think there is. I'm still somewhat skeptical. There's a lot of, like I said, there was a lot of damage done over the last several months. But as I see this, I was really thinking we could play off this and have this red bar right here and have a deeper pullback. But we're look what's happening here. We're kind of going sideways again, much like we did over here. And, typically, more times than not, when you do have an up move followed by some sideways action, it does continue in the same direction. Now, I think more has to be proven here. This is by no means am I calling a push out of this range right here. But look what else you have. You have the 10 period coming up and crossing through the 50. So this is setting up. It's still, once again, it still has to be proven. I mean, we still have this level over here that we can say is really heavy resistance, and that's kind of where we're at right now. General area. Don't try to, make these numbers inexact. It's very hard to do. I talked about this on Tuesday. Just kind of use areas, all right? And so, we're coming to a point here where we could decide, what's going to happen here in the coming few days, few weeks maybe. If we can break to the upside out of this range, maybe we're forming a little wedge, or we're going to break the downside and crash back through these moving average again, which could do some more damage. I don't think all the fun and games are over that we've had back here, but that's my personal opinion. Luckily in my history of trading, I didn't listen too much to my personal opinion, and I followed the price action. That's what your job as traders are. It's okay to have opinions and ideas that you may think is going to be happening in the marketplace, coming up, but don't bet on them. Okay, it's not your job to prognosticate. It's your job to follow price action and to react. Okay, this job is more reactive. Now when it comes to longer term trading, yes, I understand sometimes timing can be good there. Guys, bear with me since because I know Scott's keeping an eye on there, but if you have a I don't see anything now, but if you have a question and you drop it in the questions panel, I don't immediately get to it. Just hard for me to follow the questions and do this. But yeah, it's kind of the same market recap we had on Tuesday. We're pretty much in the same spot as we were, so I'm not going to linger too much on this. We'll take a look at the Qs. Kind of doing the same thing there. No reason for extra elaboration there. And diamonds and IWM as well. They kind of got the same kind of picture across the board. So it'll be interesting to see what happens. But that's far as a market recap, I think that's going to get it today, guys. I think the key areas to watch when you start developing these actions is you want to watch, these lows. And of course, you break these moving average and break below these lows. All bets can be off to the upside for the market in general, I guess, for a bit. And then, of course, you want to watch the upside right here as well. I'm going to draw it. You guys can see it. All right, I got too many lines here. Let me erase some of these. All right, let's go to Holly. Excuse me one sec. All right, today in Holly, we're just going to go through this together, guys. I was putting together all my other content today. I watched Holly all day, but I really didn't get a chance to put together any sort of presentation like I try to do. Jamie normally does this for me, but you can see here, this is Holly 2.0. She performed the best, and you can see, interesting enough, kind of a mixed bag here. We had some longs and we had some shorts. We had some long winners and we had some short winners. No stop outs. No stop hits in the Holly 2.0. That is a pretty good day, especially, remember guys, look at the backdrop. This is our market today. Up, down, and all around. I mean, just nothing. Trust me, from a guy who day traded for 17 years, this is a very difficult market to, I don't care what quarter system you're using, it's a very difficult market to trade. And when you see a strategy or segment like this, Holly 2.0, basically doing longs and shorts, majority of them, maybe one more short than long, and performing quite well. Look at that risk on. That is a really good day. We can go through some of these trades here. Take a look here. This was one this morning called on support. It's ANDX. Nice little trade there. Look at here. You may not have caught it on this one, but look what happened. You leave your bid out there, and it went quite a bit lower there. Yeah, David, 2.0 has been doing. It's funny. They kind of shuffle around. They kind of get on these streaks. 2.0 has been doing good lately. And all right, so let's. That's a really nice trade right there. I always like to keep an eye on these on support trades. Here's another one on support. As a matter of fact, if we sort it, look at the top two there. GWB, another one. Look at this beautiful trade right here. Comes down. There's your trigger. Few cents lower, and then look at that for the rest of the day. Great trade. Let's take a look at NEO was the second best. Now NEO had some stop hits. This one would have been more difficult to trade, and the reason I say is if you are stopping out and not getting back in, like our software is going to be able to let you do down the road when we start auto trading, you might not have done as well, because I can see where risk off. I don't have to pull it up, but I know risk off definitely didn't perform anything like risk on. Once again, another mixed bag. Mostly longs, but did have some shorts sprinkled in there. And Holly Grail was one of the worst performers on risk off, down $1 today. But overall, guys, the numbers, that's not bad at all. Not bad at all when you're looking at what the spiders gave us to work with today, with no follow through in any direction. And, it makes for a tough day for any strategy. And I think Holly did as well as anything I could have put together. So with that being said, guys, I'm going to move on to the next topic. Bear with me just a minute. All right, so Steve has been talking about the fast line a lot lately, and I don't blame him. It's a very important line, especially when it comes to momentum stocks. And today, well, you can see I actually have an 8 period in here right now. So what I was doing today, and I'll show you. So I'm thinking, well, why don't we develop a little top list for the fast lines so we can, we'll know when this happens. Like NVIDIA came down today after a nice move, and look at there. This bottom one's a 10 period. The one above it's an 8 period. So I'm saying, gosh, why don't we build something that could give us just give us a little readout every time something's butting up against this 10 period moving average. And of course we want it up on the day. So what I did, I said, well, let's find out, since all we have to work with in our filters is an 8 period moving average. So what I did was, let me see if I can find it. Yeah. So you can do this. Anybody can do this. So I said, well, let's just create a top list. Okay, don't have any filters in it. no filters, and we're going to go to symbol list, and we're going to do a single symbol, NVIDIA, and we're going to make the column change from 8-period SMA, okay? So what I did is change from 8-period SMA, and I put the time on 10:15 Central Time. So if you look what's happening right here, because what I wanted to see where the 8-period was, so I can see where the 10-period, where to mark this 10-period up on my filters. So what I did, I haven't built anything yet. Okay, all I'm doing is finding out where the 10-period is on this one. Well, I can see it's negative 0.2 below the 8-period SMA. So now I got an idea of where to put my range if I wanted to find stocks that are pulling back to their 10-period moving average, their fast line. I did ask Steve, guys. I know life on the fast line. I know that's Steve's. I asked him, could I use it? I told him I'd give him all the credit. So let's take a look here at what I did. Okay, so I wanted to configure a top list because I wanted to be something I can just scan through charts when they're coming through. So we don't have an alert here. There's no alert. It's just a top list. It's a scan. And let's look at the filters. All right. I want stocks between $5 and $300. Change from the close. I want it to be up at least 2%. Change from the open. I might not have to use this, but I kind of want something at least holding up. In other words, I don't want something to gap up and then just a real quick move down to the 8-period or 10-period. I'm sorry. I want it to be at least up 1% from the open. Okay, so now I got change from the close up 2%, so I know it's up, and I also know it's up, change from the open at least 1%. So in other words, it opened up, it moved higher, now it's pulling back and still above its opening price. It's going to be a more constructive looking chart. Average daily volume, I'm going to share this with you guys, and if you like to play thinner stocks, you can put whatever you want to in there, 200,000, 300,000. I like to play liquid stocks. Okay, you can see what I did. Change from the 8. I know if I put negative 0.2 in here, I'm going to catch that NVIDIA because of what I built on that one I just showed you. I'm sorry, I moved it off to another monitor. But so now I know if I put it, negative 0.2, I'm going to catch NVIDIA, and I don't want it to be above the 8 because I don't want to catch stocks way off of their 10-period moving average. Ideally, I like to catch them right when they're coming in, right when they're about to hit it. Or touching it right at the moment. So that's it. Position in 15-minute range. Because what I was seeing in here, guys, I was seeing a lot of symbols coming through, and I'd click them, and I would be getting stocks that are coming up and just barely, So what I want to see stocks in the 15-minute range that are in the lower portion of it. So in other words, they are coming down to the 10-period moving average and not something in the upper portion of their 15-minute range. In other words, they just came from below and got in and ticked above it, okay? So once again, it's how you get creative, just thinking with your head, picturing a chart and say, okay, I want stocks that are hopefully pulling back. Now they could be going sideways, but we'll take a look at, and actually sideways is good. Steve talks about how he loves for them to go sideways, and we'll catch those too because they'll be in the lower portion of their 15-minute range in most cases. All right, so that's it. And so let's see what we have. And bear with me one more time. Okay, these are going to be all the symbols that close at the end of the day. For those of you who guys are in here for the first time, we have live during market hours, which means when the market closes, these freeze. This is great for scanning. So now I can come in, you want to find stocks that closed right on their 10-period moving average and was strong pretty much all day. Let's see what we got. Look at Weyerhaeuser. Now that's beautiful. Look what we would have seen right here. We would have caught it right here, I bet you. As a matter of fact, we're going to do a test on that. I haven't looked at this. We're going to test my theses here. All right. MDRX. You can see it now. Remember, guys, the lower line is going to be the 10 period moving average, and when you see this below it right now, remember when you go back in history, it shows you everything for a 5-minute time frame. So this would have been right at the 10 period moving average, and it sold off probably in the last 5 minutes. Flex, there's one coming right back, touching it on the close. There's another one. You can see it's working. Okay, we got price action right at the 10 period moving average. SMHs were strong all day. All right. So let's go. First, let's go and see. Where's that one? Wiser House. I'm going to test this, and I hope it's in there, because if it don't, I'll get all pissy and start trying to figure out why. All right, so let's find this level right here. Looks like it is 11:15 my time. Let's go to use historical date. We're going to go in here, guys. For those of you in here that are new, I can go back in time and find out what stocks were hitting or fulfilling these filter sets at any given time. And of course, it's not in there. Let me go. Let me try it. I just built this afternoon, so what I may end up doing is coming in and doing 25. This should be in there. Uh, 11:15. Yep, let me try putting in on 11:10. 11:10. There it is. It was probably, yeah, just the candle was just off there a little bit, because we can see it right there at 11:10. On this candle, it may have dove down a little bit lower, but you can see it right there. So that makes me feel better. I would rather catch it right before anyway. All right, so that feels good. Now let's go. Let's take a look at NVIDIA, the one that I wanted to make sure that we caught, because that's textbook as well, right here at, once again, at 10:15. So what we're going to do is go back in time, and let's see what we had in there at 10:15. There it is, the only one in there at 10:15, NVIDIA. So we got it right there. Ah, yes, thank you, Waleed. Yeah, this is going to be nice, because now I will say this: these momentum, they work really well on really strong charts, or on good charts like LUR6 today. If you would have had a continuing move, if the market had not been so sloppy, maybe we would have gotten another, move out of that one, even though it was setting up all day. I'm sure we got it right here. As a matter of fact, I think I looked. Well, here we go. Let's run another test. Let's see what time that is. It's 11 o'clock. Let's see. Yeah, Steve was excited about that too, because you know how well he loves the please be in there. And it's not. Let's take a look at some of these at 11 o'clock though. Rambus. Yep. Oh wait, that's 10:30. Yeah, 11 o'clock would have been right below it. That's the one thing about when you do these COF at 11 o'clock. 10:45. Yeah, it started right when it started. See, that's the problem. It's going to show you every symbol in here, but when you have a 30-second refresh, this one would have left after the first. Once it starts trading down below that 10-period moving average, it would have gone off. It's just tough when you do these time frames, because they give you a 5-minute time frame. That would have been a nice one there. Finally worked there. PVG. And you can play around with these too. I mean, you can play around with these filters and see that one finally worked. And honestly, guys, unless it's just a really the momentum stocks are going to work the best. The ones doing big, huge volume, those are the ones that are going to work the best. You see Steve go over it all the time, in his webinars, and especially when you have a very strong market with it, it'll just follow those fast lines. So today's probably not a very good example, but I'll tell you what I'm going to do. I'm going to share this with you, put it back on live always, and yeah, thank you, Waleed. Appreciate it. Yeah, it's just and really, you could probably go a little bit lower than that -2 but I don't know. I'll let you guys play with it. And I just started this, like I said, this afternoon, about 2 hours before the thing. So I'm sure I'll work on it some more as well. Get some. What am I doing? I'm gonna share and save. Copy all. So what I'm doing, guys, for those who are not members, I'm able to share this scan so people can use it themselves. And I'll just type on here, life in the fast lane. Life on the fast line. I'm getting confused with the song. All right. So now you guys have access to that. You're welcome, Waleed. Armin, real quick, this is recorded. Real quick, I just shared that alert, and what this will do is help you to find stocks that the fast line is the 10-period moving average. And this is going to help you find stocks that are up on the day and that are touching their or close to their 10-period moving average. So that way, you can act upon them. You're welcome. And yeah, you can take a look at the configuration there, and it will all make sense to you. But I had to use the 8-period moving average. So when you go into the configure sets, the filter sets, and you see the 8-period versus the 10-period, that's all we have to work with. So I kind of created a parameter that would put it close to the 10-day. All right, let's see, guys. One I was going to talk about. Oh yeah, here she is. All right, so I wanted to give you guys an idea, because I've worked in all these areas in my trading career, and just kind of want to give you an idea of the pros and cons. All right, because when it comes to trading, obviously there's also, this is separate from the type of day trading, scalping, swing trading, but this has more to do with the way you're going to do it. In other words, you can do a style called discretionary trading. You can do auto trading, which is what a lot of people are doing with the Brokerage Plus. And you can do a thing that's called gray box. Now, what a gray box is, it's kind of, this is man with machine. It's kind of our mantra here. No, I shouldn't say mantra, but anyway, you hear us talk about it a lot because we're kind of passionate about that. We think, man with the machine is probably the best way to go about it. And so what gray box is, and people have been using this for a very long time, it's a system or a strategy where you use a machine to basically help you get into a trade. In other words, it gives you an entry, and then you take that entry and you manage it, okay? And as I go through the pros and cons, I'll tell you why, I think, the ability to be able to manage it is above, I think, what artificial intelligence can do, okay? But anyway, let's start with discretionary, okay? So discretionary trading, let's look at the pros, okay? The pros, control of all execution. I mean, you're not having to rely on any machines at all. It's you with a mouse and a keyboard, and you're clicking through, and you decide when a trade's going to be made. You decide when you're going to exit that trade. You're constantly, absorbing yourself in the market and using your tools to execute trades manually. There's a lot of control there, which can be comforting. You're not relying on anybody's strategies. You're not relying on anybody's, fancy technology to get it in. It's just you in the market. And so there is a lot of control when it comes to discretionary. Another pro is you're less likely to to overtrade, and not always the case for everybody. I mean, but if you have several strategies running, okay, more than likely your strategies are going to spit out more than 2 or 3 trades a day. Okay, most cases they're probably going to spit out anywhere from, let's say 7 or 8 on up to whatever, 20, 30. So you're going to be getting in a lot of trades and more of them. And so you will trade more probably if you're, I shouldn't say probably, more than likely you're going to trade more if you're auto trading, because you're going to have more than one strategy, and each one of those strategies are going to be spitting out a number of trades per day. If you have some sort of strategy that's only spitting out one today, more than likely you did a lot of curve fitting, and it's just anomaly. It's probably not that effective in the long run. All right, the cons to discretionary trading. Okay, your limited focus. All right, because it's only you. All that control gives you a lot of power, but also gives you a limited amount of focus. And what I mean by that is you don't have any system getting you into trades. Therefore, you have to look through each one of your alerts, each one of your scans. You got to market the current market conditions, the sectors, what are they doing? There's a lot of stuff that can pull you away from your focus. All right, so whereas if you're gray boxing and you got trades getting you in, now you're just managing those trades, and your focus can just rely on P&Ls and managing those trades. You don't have to be looking for opportunity. So that can be a con. Just searching for opportunity, it can be a con in a sense where you can miss. Con, it's more emotional. Okay, now because you're less dependent. Once again, it's kind of like the CEO of an organization who doesn't like to give anybody else orders because he knows he can do it the best. Well, what happens is he's doing everything, and he's much more emotional because he's all the onus is on him to make it successful. And the same thing can be done with trading. You're not relying on technology and strategies to get you into a trade. And not only that, it comes back to focus. You're looking everywhere for opportunity, and it just can be more a ton more emotional. And obviously, some more man hours. Okay, you're not letting the machine take a load of your work. In other words, the machines can handle a lot of workload. They can help you get you into trades where you might miss because you're overworked, looking for all this opportunity everywhere. And it takes more man hours, and now you're also having to do a lot more homework at night, which is good. Even if you're auto trading, you got to be setting your strategies up for the next day. So there's still homework to be done, but not the kind of hours you need to spend if you're not relying on any of your strategies to help you get into a trade. All right, auto trading. Auto trading, guys, is just basically you hooking up and letting it go. All right, your entries are set for you, your stops are set for you, your targets are set for you, and you're not doing anything. Obviously, you can sit and watch, but if you get to the point where you're taking over, that's fine, but now you're kind of straddling the fence of gray boxing. Okay, are you going to be doing solely auto trading, or are you going to be letting, what are you going to do here? So auto trading, I'm talking about pure auto trading, where you don't basically do a thing. The machines does everything for you. Bear with me again. I'm actually doing a lot better than I thought I would. Okay, pros. It's less emotional. Okay, you are setting everything up to these strategies to enter, to take profits, to exit, to stop loss. So it's less emotional. Obviously, you're not having to make the decisions. The machine is doing all that for you, so it's less emotional. Predefined alerts finds the setup for you, guys. I can't tell you how important this is, and it's also I didn't put it in. Well, I kind of did put it in gray box. The most important part of the trade, guys, is the entry. Okay, So if you can create these alerts to look for these really good entries, you've got the most important part of the trade done. Okay. Now, obviously, you got to have risk management. You got to have management when it comes to when to take profits, when to take half off or whatever it is. But none of that can be done if you don't have a good entry. Okay. So this is a big pro for auto trading. Okay. If you can set the strategies up to find you those good entries and then execute them for you, that's that's a huge part of the trading process. Another pro is more free time. Okay, you're not in auto trading. You're not having to sit there and monitor every trade and watch every trade. Uh, so obviously you're going to have a little more free time on your hands. Cons. Okay, you're totally dependent on the machines, and this could be a down. This is what I don't like about it. Is I don't believe there's any there's no machines, no AI, artificial intelligence that can that that can really gauge what all's happening in the market at any given time, because there's no one day is exactly like, it's like a cloud, man. No one day is exactly like another day. There's never been two exact days in the market. There's too many instruments being traded. It's just a constant, influx of data, and it's just no day is the same. So what happens is, and it's why I believe it's so hard for some of these strategies to outperform a good trader that's doing a gray box, because let me try to think of an example. Yes, Waleed hits it right there. He said the market has so many moving parts. It does. I mean, if you get into a trade, okay, let's say an auto trade has all this data backed up for years worth of data. You get into a trade, all of a sudden it's traded. Okay, what's the SPY doing? All right, what's the sectors doing? What are the sectors doing? Are you short a semi like today, and the semis are way up? Oh yes, you can have a filter in there for that. But there's just too many different scenarios that can happen on any given day in the marketplace, and it's just so dynamic. And I just don't think auto trading machines can act as good as a man with the machine. And there's, like I said, too many variables in the market there at the bottom, which is pretty much the same thing as market flow. You get a sudden market fluctuation, and you're on the wrong side, and you're auto trading, and you're out making or having breakfast while your machine's auto trading. Well, if you didn't have some filters in there set for that, to get you out of that sudden market fluctuation, you're hosed. Versus if you're sitting there at your computer, boom, 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 you're out. All right, let's move on to gray box. Okay, so gray box, this is the one I love. This is the one, it's been going on for a long time. Machine gets you into the trade, very much kind of like what you see with Holly, okay, or your own strategies. And machines are really good about finding entries, all right? Obviously, you have to set up the parameters. You have to set up these alerts and alert you and what you're looking for. But machine will go out there. Machines are great at crunching data that you can't. And they find the alert. Boom, it pops up on your blotter, and you have to manage. That's the way gray box can work. And the pros, okay, once again, the top there. Machine finds the setup for you. That can be huge, okay? And I think a pro is the trader can manage. Now a trader is not wasting all his time out there trying to find, the right thing to trade, the right setup. Not that I am not knocking that. Okay, there's some people that probably that only trade a certain stock, or only trade a certain stock that's up 20% on the day or something like that. That's fine. But if you are one that's having trouble, I don't know what to trade. Everything's moving and taking off. Well, this is where a gray box can really help you. Let your alerts find you, and then you're just managing. You're managing it. You're a mini hedge fund manager. All right. Another pro can react quickly to changing markets. There you go. The con for auto trading. This is where a trader can sit here, news comes out, big red tick in the S&P E-minis, and boom, 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 he's out. And you're selling all your longs and you're keeping all your shorts, whereas an auto trader is going to get killed, probably on, if the strategy is not sophisticated enough to see that. And trust me, the vast majority of them aren't. Cons to gray box, and you kind of a tendency to overtrade, okay? Because kind of getting back to what I mentioned earlier, where you are creating these strategies. Most of them are going to have probably 7 to 8 to anywhere to 20 trades a day. So you want to have it's a tough, because you don't want to curve fit your strategies to where you're only getting a few. And you can always set your in Brokerage Plus, you can limit the number of trades that will execute through that strategy. Right now I have mine set on 10 per strategy, but after a while I'm looking over there, I'm like, wow, I got like 25, 30 positions, and I'm just a little hedge fund manager. Something I wouldn't do under a discretionary way. Through my years, I was predominantly a discretionary trader. I would have, maybe average probably 8 to 10 trades at a time, on my blotter. Nothing like I'm doing now, and just playing around with the Brokerage Plus for now. But yeah, you can have a lot of trades. This is not for anybody who has a per trade commission structure. You'll get killed. You have to have a per share, because you're going to do more trades and you're going to have less size on those trades. All right, another con, trader has to choose strategies and manage, okay? So let's not think that because you have a strategy that's going out there and finding you these great trades that it's that easy. Don't forget who's going to be setting these up for you. People may be saying, well, Holly's going to be doing that for me in the future, but that is true. But you still have to decide which strategies you're going to put in play. I'll give you a prime example. Let's take a look at the spiders. I believe it was this, gosh, where is the big, I guess it was that one. Yeah, I guess it was this day, 2 days ago, where we had kind of a gap down and pretty much traded down all day. That was it, and then bounced. Holly had a real good day, but it would have been great if you wouldn't have taken any of her longs. So here's what I'm getting at. If you're putting together some strategies and you're coming into the day and you're seeing a big gap down, it's going to be up to you to decide, okay, what strategies do I want to put to work here? Do I want to put long strategies in a market that's gapping down? It may work, may gap down and just go straight up. Or it may do what it did on this day, and if you would have been playing Holly only the short ones, you would have made a killing. If you played long, you did okay. You still made money, but nothing like you would have made if you just played the short side. So that's what I'm talking about here when I say you have to choose the strategies and you have to manage them. So yeah, so unlike auto trading, where they just automatically get you out of the losers and the winners, whatever, keep running. If you're gray boxing, you're going to have to choose which strategies to run, which ones to let run for you, which ones to cut. That can be if you're not good. In other words, if you're not wired correctly, and you're taking your winners off the board too quickly, and you're thinking those red ones are going to come back. Yeah, that could be a very defeating purpose. So you might want to. This could be a huge con if you're not a good trader. But for the most part, guys, that's it. I wanted to give you guys. I don't know what happened there. Okay. An idea of the different different ways of trading there. Oh, thank you, Waleed. And it looks like Scott answered Jeree there. Yes, Jeree. There will be a recording of this. Uh, Guys, let's see. If you have any questions, I'm going to open it up for a few minutes. Questions. I'm sorry, I'm not going to look at any charts today. I just barely all I could do to get through this. But thank you, Waleed. Yeah, I don't feel as bad as I sound. I'm just real stuffy. Uh, I'll say, Tony, hi. Can I save a Holly strategy and use it in Brokerage Plus? No, you don't have access to the Holly strategies, Tony, to use in Brokerage Plus. Now, that being said, we're going to make Holly available to use in Brokerage Plus in the future. I'm not setting a time on that because I know how this is a very, very important thing to get right. And I will say, it's probably I shouldn't say I'm sure, probably the first quarter, but I don't know. I don't know. I don't like to make ETAs when it comes to this technology because it could be some little quirks and glitches here and there. But you will be able to trade them soon. Will Holly test drive open up the weekend before the first? So yeah, James, you'll get it usually the Friday before the 4th. You'll get access to it. Yes, David. David says maybe if you want to trade Holly, you can select the ones that have the highest win rate coming into the day. That's true. Uh, uh, I'm going to suggest that we even have a filter built into Brokerage Plus, where like just a market filter like SPYs or something like that, where if it's down X amount, you only take longs. I don't know, but there's several stuff we can. This is still a work in progress, and it will always will be because we can build on this, and that's what we're real good at doing. But all right, guys, we had a great crowd today, and you guys who are not signed up, you guys hang on. I'm going to bring Scott back in. He's going to have a promo code that you can use and get a discount for a subscription. So, Scotty, if you want to come in and walk them out.
Yeah, sounds good. A couple of reminders on the way out. We do have a test drive coming up early in February. It starts February 4th. Get signed up for that before it starts to get the most out of it. Find out the details at trade-ideas.com/test drive, and that's where you go to register. You get 5 full days of Trade Ideas Premium and the ability to try out Holly, the AIs, and other premium features for 5 trading days, along with some special webinars, extra support, all that kind of good stuff. If you're a standard subscriber, it's a great way to see what premium's really about. If you're not yet a subscriber at all, it's a great way to try everything out and see what's right for you. There is a ebook that's been out for almost a year now, but it's still very relevant. Andy contributed a chapter or two to this. It's 5 ways to win in the post BTFD market. It's good for having 5 strategies that you can use, keeping your trader's toolbox to survive when stuff's not really going in a buy the dip kind of market. Trade-ideas.com/ebook is the page to go to put in your email address and get that download link. So make that happen if you don't have it already. We have a podcast. A new one will be coming out possibly tomorrow, although I think that might end up getting postponed unless we have a guest webinar in the can, because I did notice that one of our hosts is traveling and the other one is on vacation. So I'll find out about that. But you can listen to the back issues if you search for Trade Ideas Podcast in whatever app you listen to. We have some great ones in the back catalog, a couple of guest podcasts shortly before the end of the year. And we might actually have something new for you tomorrow, but we shall see. If you have any questions, email us at there is a discount code. Almost forgot. It's good this month. Winter Studio, all caps, saves 15% off your first month or year of Trade Ideas. You can also use that if you're a standard subscriber to get on the upgrade path. Just use the same code and save on the upgrade. Any questions, email us info@trade-ideas.com. You can follow us on Twitter at Trade Ideas. We're also on Facebook. Trade Ideas Pro is the Facebook handle. And we will see you all next week. Oh, there's also a Friday support webinar session. You should get an invite for that later on. It's an open session that you can ask questions in. So if you have questions from today, show up tomorrow for the Friday support webinar and get the answers. Thanks, Andy. Thanks for being a trooper and hanging in there while you're not feeling great, and for everyone for listening to the sniffles and everything. Feel better soon, and thanks everyone for attending.
Thank you, Scott, and thanks everybody for wishing me well. And yeah, just see you guys tomorrow. Bye-bye.
Later.